Cathie Wood sat down with Bloomberg Business Week this past week, where she discussed her investment in Archer Aviation, a company focused on autonomous transportation in the skies. She talks about going against the short sellers and expresses confidence in Archer's potential due to partnerships with Boeing, Stellantis, and United Airlines, as well as regulatory progress in other countries.
Around research and original research. I'll start with Too Simple. We sold Too Simple after the CEO, who was the technology visionary, left. And so Grizzly got that right, I don't think for the right reasons, although we were in the teeth of a massive bear market as well. If that CEO had not left, I don't think we would have sold that stock. In the case of Archer, we have a high degree of confidence in Archer. One thing to understand about ARC is we are the closest, ARC is the closest you'll find to a venture capital company in the public equity markets. And we tread where others in the traditional asset management world will not go, at least on the public side, when we see a real opportunity. As we're doing our work on autonomous vehicles, we concluded that the cost is going to drop so much that roads are going to become very congested in the future, much more congested, if you can imagine, New York City. And so we then started doing work about transportation in the skies. Is it possible? Yes, it is possible. The FAA is the gating factor from a regulatory point of view. There are two companies the FAA is working very closely with, and I think because of successes elsewhere in the world, other companies are having success where regulators have not been as strict. I think there's been a little more pressure on the FAA to pay close attention here. And the two are Archer and Joby. Our confidence went up when Boeing, which was suing it for patent infringement, settled the case and actually took an ownership position in Archer, as has Stellantis and United Airlines. So three very deep-pocketed partners who are also trying to figure out the future of transportation. And we know that they're on their way, both Joby and Archer, to FAA certification. Seems like the process is in motion, and we haven't had a hiccup. And it has an MOU with Abu Dhabi to launch an air taxi service in 26. And pending regulation, it has an MOU with Interglobe to launch an air taxi service in India. Both of those have been much better from a regulatory point of view.
But how big of a concern is it to you that regulators here in the U.S. could drag their feet? We did speak with an airline executive recently who is concerned that the FAA is moving slower than other regulatory bodies when it comes to this type of technology.
Yes, and that is why we pay a lot of attention to regulatory arbitrage. We've seen innovation move abroad to other countries, even Amazon. The FAA wouldn't let Amazon fly its drones, ninth generation, nearly 10 years ago, on its own property outside. So it went to India and elsewhere. I think the pressure's on the FAA now. And I also think that the bear market of 21 and 22 eliminated a lot of other competition that was brewing. Just the funding markets were closed. And so I think this market is much more, that both Joby and Archer are going to have much more share than otherwise would have been the case. So we're pretty excited about the possibilities here.